What's up, YouTube family? It's your boy Mike Macklin, aka Money Mike, the financial Thanos, because I'm snapping my fingers and I'm turning your financial problems to dust. Today we're asking the question, have you ever been turned down for a loan because of not having enough income? So I had that situation actually happen to me. As a self-employed person, there's a different kind of employment verification, document, income, all that different stuff. So I found it difficult to get approved for a home loan, and that really kind of upset me. So anytime I want to learn something new, as y'all know, I jump in the lab and learn this new information. So I wanted to take you guys on this journey as we learn how to actually get approved for what's called a no income verification home loan. So if y'all ready to check this out, I'm definitely ready to check it out. Let's go.
On the night I was born, the rain was pouring, God was crying, lightning struck, power outage, sparks was flying, the real one's here.
What's up, family? It's your boy Money Mike back with another one. Yes, indeed. We are checking out a video on how to get approved for a no income verification home loan. This is definitely going to be something helpful for the people who may be having a hard time getting approved for a home loan as a self-employed person. I think this is more kind of catered towards you all, but we're going to get started with this video, check out what the information has for us. We'll talk about our pros and cons about this. And as always, don't forget to like, follow, share, and also subscribe to this channel so you can get more content like this. I would appreciate the subscriptions. But anyway, let's go ahead and check this video out.
Everything that you need to know about getting a no income verification mortgage coming up. Hey guys, I'm Adam Lesner, and my Oxygen is getting borrowers approved for a mortgage when other lenders say that it's just not possible. Today we're looking at what you need to know about getting a no income verification mortgage, advantages of getting this type of mortgage, requirements on a home purchase and a refinance, and some tips to keep in mind when getting a no income verification mortgage. Let's take a look. A no income verification mortgage loan is a type of mortgage that does not require borrowers to provide documentation of their income. This can be appealing for self-employed individuals or those who have fluctuating or hard to verify income. It can also be useful for those who want to keep their employment information private. However, it's important to note that no income verification loans may require a larger down payment or a higher credit score than traditional loans. This loan is approved based on credit and reserves. You do not provide any pay stubs, W-2s, or tax returns. This option is for primary residence and second homes and can be used to purchase or refinance property. For investment property, getting a DSCR loan would be the better option, and I've covered DSCR loans in other episodes if you want to take a look at that as well. Advantages of getting a no income verification mortgage.
Hold on real quick. I want to kind of throw some history lesson in here, why this is even a thing. So back before the mortgage crash or the mortgage bubble in 2008, a lot of lenders were actually giving loans based off of what's called stated income. So that means they were kind of doing what this is. They were not requiring you to have income verification documents when approving loans. Now this came back to bite them and the people who got the homes without the income verification in the butt, because basically these loans were given to people who they knew, the people taking the loans and the people giving the loans both knew in their heart of hearts that the person more than likely couldn't afford the loan and would probably default. So a lot of people lost their homes, and this got a lot of attention. So a lot of laws got passed basically saying, hey, listen, you guys are going to have to make sure that you verify that individuals are actually able to afford these homes so we don't have this issue happen again. So that was just a quick history lesson on how this even came to be, of why, the whole income verification came to play. So let's get back into the video.
Number one, privacy. No income verification mortgage allows borrowers to keep their financial information private. This can be appealing for those who do not want to disclose their income or employment to a lender. Number two, convenience. When you're not required to report employment or income history, the amount of documentation needed for approval is substantially reduced. So let's take a look on a home purchase with a no income verification loan. Here's what you can expect when buying a home with no income verification. At least 20% down with 740 plus credit and 12 months reserves. You can go as low as 640 credit is allowed with a 35% down payment and 24 months reserves. This is available on 30-year fixed, and there's ARM options as well. I brought up the fact that you need reserves. So what are reserves? Reserves are the number of months of mortgage payments you have left over in verifiable assets after accounting for the amount needed at closing for down payment, costs, and escrows. How about on a refinance for a no income verification loan? This is available on rate and term refinance as well as a cash out refinance. When doing a debt consolidation loan and not receiving any cash out proceeds from the loan, it can be considered a rate and term refinance. This is a benefit because it allows a higher loan to value ratio. So here's what you can expect. Rate and term refinance or debt consolidation refinance with no cash out proceeds, you can go up to 80% loan to value ratio with 740 plus credit and 12 months reserves. You can go as low as 640 credit score with a max of 65% loan to value ratio and 24 months reserve. On a cash.
Real quick, I wanted to kind of just demystify some of these terms as being the biggest one is this loan to value. Loan to value means how much the loan is versus the value of the home. So let's say your home is worth $200,000. So the loan to value, meaning the value of your home, you can get 65% of that value towards the loan. So let's use easy numbers. $100,000. Let's say you was trying to get $100,000. Well, your home was worth $100,000. Let's do that. Let's say your home was worth $100,000, and basically this means that you can get $65,000 as a loan. That's 65% of that $100,000 as your actual loan amount. So that's what the loan to value means, meaning how much the loan is versus the value of your home. You'll get 65% or whatever that percentage is in this particular case. But depending on what you're getting, it can go as high as like 90%. So it just all depends on a lot of things. But I just wanted to kind of demystify what loan to value is. So let's get back into it.
Refinance up to 70% loan to value ratio with 12 months reserves and as low as 660 credit score with a max loan to value ratio of 70% with 24 months reserves. Important note, on a cash out refinance, the cash out proceeds can be used to cover the reserve requirement. Here are some steps you can take to increase your chances of getting a no income verification mortgage. Check it out. Number one, improve your credit score. A higher credit score can make you more attractive borrower to lenders. Having a higher score may increase your chances of getting approved for a no income verification mortgage. You can improve your credit score by paying your bills on time, keeping your credit card balances low, and avoiding applying for too much credit. Number two, consider a lender that specializes in no income verification loans. Here's the thing, not everybody does it. In fact, most lenders don't do it. We do them. You're welcome to reach out to me at balanceprocess.com. Happy to talk with you and see what we can do. But you want to work with a lender, obviously, that is super familiar with this type of loan. Number three, save for a larger down payment. No income verification mortgage loans often require a larger down payment, typically 20% or more depending on credit score, as I covered before. By saving for a larger down payment, you can make yourself a more attractive borrower to lenders and increase your chances of getting approved. It's important to carefully consider the pros and cons of a no income verification mortgage loan before applying. While they can be a convenient option for many borrowers, there may be additional requirements that you need to meet. It's always a good idea to consult with a lender like me to determine the best option for your financial situation. Overall, getting a no income verification mortgage loan can be a great solution to accomplish your homeownership goals if you've been told you don't qualify due to your income or employment history. By improving your credit and having the ability to document strong assets, you can increase your chances of getting approved for this type of loan.
All right, so there we have it, people, the no income verification loan. I'm going to talk really quickly about the pros and cons. I know he mentioned it, but I kind of want to just break it into Money Mike terms. The pros, obviously, is it's a way for self-employed people or people in a little bit of a different employment situation to still qualify for a home. Now, a big takeaway from it is you're going to have some money on deck. Like, that's the thing about it. I'm not a huge fan of putting money up towards anything like that, but in some cases you may find yourself in a situation of having to do this just to get yourself into a home, because trust me when I tell you, home ownership is a good starting point to a lot of financial strategies that you can actually implement. There's a lot of ways that you can leverage your home in order to do some pretty amazing things with your finances, but that's another video for another day. Another pro is that it reduces the amount of paperwork that you have to have, because a lot of the paperwork that we talked about before, as far as verifying that you actually have enough money to afford this mortgage, goes away, because now they're basing the loan off of basically the money you showing already, like the money you have in reserves, as well as a higher down payment. So you already got skin in the game, and they've already seen, okay, this person has enough money to basically cover like 2 years of reserves, which is something you should have anyway. Not 2 years per se, but at least a year of expenses saved to the side. But again, that's another topic. Some of the cons, obviously, again, the high dollar amount that you have to have on hand. I don't like having to use my money. I don't like having to do it. Obviously, there are some ways around that. If you have a credit card balance, a credit card limit that's pretty high, you can actually do some clever things with that. I won't talk about right now. It's not illegal, but it's just something that's kind of technical, and I don't want to talk about that in this video to make it nice and short. But you can leverage your credit that you have available and use that to show money. Or if you have different assets, maybe you have other homes, or you have cars, you have boats, you have stock. There's a lot of ways that you could show that, okay, hey, listen, I can cover this. But anyway, that is my time. I hope you guys enjoyed this video on how to get approved for a no income verification loan. But anyway, if you enjoyed this, please go ahead and hit the like, follow, and share button, and also subscribe to my channel. And as always, I love you. God loves you. He smiles when he sees you, and he sees you all the time, so he's always smiling. So why aren't we? All right, y'all. I will catch you guys on the next one. God bless each and every one of you.